Hello and what is up, everyone? Are you ready? Are you ready to go to war? Sorry guys, got a little bit of allergies going on today. Yes, we're going to war. Titanic mode activated. Iceberg mode activated. We are going to do some things today, that's for sure. We are gonna do some things. Jeez, Market Watch already locked me out behind their paywall. Let's see what's going on here. Oh. See what's going on with Market Watch. See if we can find any interesting articles. Let's see. Pull this up on the stream. I am... Let's see. Does that work? No. I'm so confused. Sometimes it doesn't work. It's almost like I have to... Good morning. Getting my helmet and sword ready. No shield today. I know. Welcome the slaughter. Welcome the blood. Are we gonna get demonetized for saying that? No, we're not. Because we're not even monetized. Let's see. Why is the browser... Why can't I always have problems getting the browser? Come on. Okay, well, anyways, give me a second. Market Watch got some interesting articles for us today. Just remove this source, add the source, window capture. New source. Browser. And it's so buggy. Anyways, how are you guys doing today? Let me know, what is your plan? What's going on? Let's flip a coin and see what stocks we should buy. But no, seriously, I do have a plan. I legit have a plan here. I do have a plan. Lemonade? Might not be a bad plan. Good morning. I'm having technical difficulties right now. Going to just watch blood rain from the sky. I know, right? Oh, we got 40 minutes. 40 minutes while I try to figure this out. Capture, add the source, new source, browser. Oh, here we go, finally. All right. Okay. There we go, we can see that, I guess. And I apologize, I have a little bit of allergies going on. Okay, so let's see what Market Watch has for us today. Huh. Buy this dip. This is the front page news. Oh, we can see the futures here, can't we? Dow Jones is up. S&P is flat. Nasdaq is flat. Well, thank the stock market gods. Crude oil is up 1.65. Heh. Don't want to buy that dinosaur. The dinosaur stocks. I'm ready. Ready for it. Okay. Buy this dip in Apple, Microsoft, and these other tech stocks before they're out of reach, says analyst. Wow. That's what we want to hear. Hopefully a lot of people click on this article and read it, digest it, really just absorb this article into your heads, everyone. And then maybe, just maybe, they will listen to this article. Well, what an interesting article. Let's click on it. I don't even know if MarketWatch is going to let me click. I'm going to hit a paywall here. Wow, look at this motorcycle that's on fire. What an interesting headline. Absorb into your brains. It has been a bad week for tech stocks. The Nasdaq tumbled 2.7% on Wednesday, and that slide looks set to continue on Thursday. What do you mean? The Nasdaq is up 0.02%. Isn't it? The risk-off trade for tech has been a painful one for tech investors this week as worries around high valuations, bubble fears, rotation trade, rising yields, and a focus on reopening plays take center stage. Yes. That's right. What a genius. But according to Ives, the digital transformation is just getting started and will last a number of years among companies in cloud, cybersecurity, e-commerce, and 5G. These subsectors are the life of the tech party, with consumer and enterprise demand catalyzing a multi-year growth boom ahead, the analyst said. What do you mean, dude? Oh, try an incognito browser if you keep getting a paywall? Man, I seriously need to go back to school and learn what these things are. I really suck at using technology. Hey man, what do you think on Microsoft? I think buy it. Read this article, dude. Look, there's a motorcycle on fire, and it says buy the dip in Apple and Microsoft. So obviously we should do that. I mean, news is such BS. Seriously. I mean, you just have to put it into perspective because they obviously want you to click. That's their entire business model. I mean, I guess they have the subscriptions too, but you know, for sure. I don't even know. Yeah, MarketWatch does have subscriptions, but they wanna get you to click for sure. And that goes for everything. I mean, I also want you to click too. So I'm gonna title it and put some fire coming out of my mouth or something like that, right? So it's all good though. No hard feelings towards the MarketWatch. Well, anyways, let me get back to this. Let me get back to this motorcycle article. And sorry guys, if I sound really bad, I have some allergies. My bad. Okay. Seriously, these are literally the best times to be trading. When we are down like, I don't know, 20%? 30%? Who knows? Who knows? My Weeble messed up because of the Soxel and the Teckle split. I don't even know anymore. No, I'm just kidding. I know. Oh. Yeah. I always buy when I see motorcycles on fire. Yes. That is the key. That is the key to money. The fire motorcycles. He is racing to buy the Microsoft. God. Forget about Microsoft. Really want the motorcycle guy to buy Apple. That's what we really want. Buy this dip in Apple, Microsoft, and these other tech stocks before they're out of reach, says analyst. Yes. My single brother-in-law wants my husband to sign over the family home where he lives in case my husband dies first. Should I agree? Just buy Apple. That's all you need. Is this Evil Knievel, though? Darth Molly, good morning. Anyways, yes, this guy, the Ivies, Ivies guy, this guy, he's right. The digital transformation is just getting started. Yes, that is the future. Don't buy the dinosaur stocks. Don't be fooled. The dinosaur stocks is short term right now because of we're opening back up. It's not the future. People are going to get fooled. These things are on such a discount. They're so cheap right now. It's just, you know, kind of have a lot already, but we're gonna work on that. We're gonna move some things around today. I have some ideas. We're gonna get into that, but I want to finish my motorcycle article first. Though collaboration software companies like Zoom, Teams, Slack, Work, and Citrix what's that? We'll see moderating growth in 2022. Many chief executives have told Wedbush that 30 to 40% of employees could remain working remotely in some form. For sure. Zoom is a good buy. I don't want to put so much money into it right now, but hey, it is what it is. You know, there's other things to do. Gosh, so many good discounts right now. Well, see, Market Watch, they are manipulating the markets. They're not watching it, they're manipulating it. The last few days, they've had so many negative, not really hit pieces, but they've had so many negative things, and not just Market Watch, but a lot of things. What are they doing? They shorting? I mean, the news can really influence people a lot. Just how it is, especially the retail investors. And then you got the news coupled with the money managers and the whales out there. They created a little panic. And yeah, okay, all of a sudden, front page news is the Fire motorcycle saying to buy Apple and Microsoft. That's great. That's great. Yes, we're on a journey to $0 now. An inverse. We are doing the SQQQ, not the TQQQ anymore. That's just how it's gonna be, I see. Literally, I am activating, and you know what? Last week I already activated somewhat of an iceberg mode because the ship started, rubbed up against that iceberg, created some holes in our ship, in the hull, on the stern, and I mean, I thought we were plugging them hole. I thought we were plugging the holes, but seems like we need to pull out the lifeboats because we're back down there. We just hit a second iceberg, and I'm about to move some things around. Oh, sorry guys. Analysts say Zoom can continue to thrive in a vaccinated world. Really? Nice. That's awesome news. Who would have thought? What an absolute genius. What an Einstein. No one would have ever imagined Zoom could continue to do well. Who wants to go back to work anyways? Who wants to go to the office? Look towards the future, guys. These things are on discount right now. I mean, for sure, we should have, sold at the very top, like on February the 16th. We should have done it. We should have sold at the top. But hey, we're not fortune tellers. a lot of people always ask me like, what do you read? Where do you get your what news do you read? What websites do you check? I check MarketWatch, guys, because they have fire motorcycles. Investors should use the current market weakness to ensure that Apple, Microsoft, DocuSign, oh my god, we've literally got all of those in some shape or form. Zscaler, Palo Alto, SailPoint, Nuance are included in their portfolios. Not a bad idea. I like this guy. Who is this guy? Across the wider sector, you know what? Who is this guy? I want to know. Can I just Google Ivis? Who is this guy? This guy's smart. He has a big brain. You know who else has a big brain? Queen Kathy has a big brain. She has a very big brain. She's buying Tesla. Like $600 something. She's buying Palantir. Palantir's not doing that bad though. She's buying a lot of things. And guess what? We're going to too. And while tech regulation is a long-term risk, it still remains a Goldilocks environment for tech stocks with the Biden administration. I tend to agree with that statement. According to Wedbush, Ivis sees President Joe Biden as likely to ramp down tensions in the cold tech war brewing between the U.S. and China, as well as encourage cybersecurity initiative. I don't know if I agree with that. I just read an article today that says, oh man, I forgot, but it was something along the lines of, they're going after the Chinese tech stocks. Ah man, I forgot. Something like that. But no. That's the funny thing. Like, we all thought that. We all thought that, okay, Trump was so hard on China, just so hard on China. And okay, so Joe Biden comes along. I mean, he literally said they're not the enemy. We should be friends with them. Like, I'm paraphrasing his quote. And so I was like, okay, cool, you know, let's be friends. They're not the enemy. That's good news. Maybe I can buy Alibaba stock again. How about the Jingdong? How about the Pinduoduo? I mean, those are good stocks, not to mention the electric vehicle ones. But you know what? The first week when he was president, he literally sent an aircraft carrier between Taiwan and China. And then he... It's all good, man. I kind of support that. Just let me know if I should be buying Alibaba or not. That's all I want to know. You can do what you want. I don't really blame you. But just let us know, man, if we should buy Baba. That's all. That's all we really care about. What should we buy? But yeah, I don't know about the cold tech war. Like, you know, it was funny because I was talking about just how much of a copycat they are today. And I mean, like, because I was chatting with you guys on the Discord, and I'm thinking like, man, we need to do some other type of video while everything's just bleeding. I was thinking about going to the Neo store to take a video of the new the Model Y copy. I forgot what the name of it is, but the smaller SUV. And I wanted to check it out, see how much it costs, and the battery, what's it called? Battery swap or whatever it's called. I just wanted to check it out. I thought I was going to make a video about it because I can't seem to find anyone that owns a Neo, which it shouldn't be that hard, but they're everywhere. But yeah, I was thinking about that, and then I was thinking about like, oh man, how much of a copy it is. I mean, the Neo stores look exactly like the Tesla stores. They're in the malls, same color scheme. I mean, it's interesting. And it's the same with like Huawei and Apple. Huawei just copied everything Apple did. Literally. You can't even really tell the difference between a Huawei and an Apple store if you just didn't look at like the name on the door and you just walked in. Pick up a phone, maybe then you could tell, but I mean, they look so similar. So the Cold War, I mean, I don't even know, man. That's kind of like, oh, they really are kind of copying everything, aren't they? Politics are not very fun, though. Market bears will come out of hibernation to warn investors that the tech boom and bull rally is over. I've said. Wedbush believes this is a golden opportunity to own the secular tech winners for the next 12 to 18 months at compelling valuations given some of these sell-offs. Seriously. The thing is, these quote unquote recovery stocks, like the airliners, the banks, travel, tourism, gambling, they haven't been making any money. For how long now? A year? They've literally been making no money. And then here we come, and then we have all of the tech and growth stocks. The earnings are coming out. They're doing fire, printing money. And then they lose like 5% in a day, down 4% in a day. Apple's just been selling off for like a couple of weeks now. But yet, the airliners are on the up and up. They don't even have every seat filled yet. I mean, this is just some interesting stuff that we find ourselves in the middle of, but this is what will separate the men from the boys and the women from the girls. Good times to be trading in the stock market. On the economic front, initial jobless claims are the headline figure. 745,000 Americans filed for unemployment last week, slightly less than the 750,000 expected, but an increase from the 730,000. Whatever. It's like a little bit more than last week, and then a little bit less than we thought, and then it's just like a little bit. There were 4.3 million continuing jobless claims in February 20th. SpaceX Starship, a prototype feature. Whatever. You know what I mean? Pretty much whatever. Okay, well, that was so much for our fire motorcycle. Let's check the futures. Wow. NASDAQ is up 0.01%. We should consider ourselves very lucky that these are not going down. Don't they have a Chinese Steve Jobs with a black turtleneck? Yes, they do, actually. Insane whale went ham for this weekend. Then you have SKT skyrocketing past for the 2019. It doesn't make any sense. But you know what makes sense? The media, the money managers, the talking heads, they come on your TVs, they send you push notifications on your phones, they scare you, they tell you the market's going to crash, and then as soon as they get off the air, they're buying Apple, they're buying Microsoft at record low levels. And apparently, the only people that we can listen to beside Queen Kathy, and then apparently the one guy named Ivis, who I don't know who he is. The Ivis from Market Watch. That's all. That's all. That's the only people level-headed. Check the 44 strike Neo for Friday. Okay. I can do that. Let me make sure I hide this so you guys can see. Okay, Neo. Yeah, let's check Neo. I saw so many Neo cars today. Oh my goodness, it's just, oh. Neo is just sick. It is sick. Neo is sick. Lee is sick. Nano is sick. Jumia is sick. My poor Reggie. Poor Reggie. Well, okay. So this Friday you said? One day? 44? Up $4? Yeah, I mean, it's possible. It's possible because it could bump up. Granted, that's like 10%, right? No. $4 over 40, I thought that was 10%. Yeah, well, the thing is 41.53, but actually pre-market is down to $40. So I mean, yeah, you could buy it for, it's going to be even cheaper than that when the market opens. So you could lotto it. Go ahead, my friend. Lotto it. I forgot what green looks like. Well, yes. We are all having a little bit of PTSD, I think. Because the NASDAQ is what? Down 0.2. Dow Jones seems to be up a little bit. Sox sold doesn't seem all that bad right now, but don't hold your breath, guys. I wanted to check this out, the Financial Bull ETF. So, yeah, just to let you guys know what I'm thinking for today. I'm thinking of... cutting the small positions, cutting the shorter midterms, and we don't really have many, to be honest with you, but I'm going to try to... I mean, we got into that Jumia, which did a little bit better towards the end of the day, and also the Costco, which earnings come out today, by the way. But I'm thinking about cutting it and then picking up, just cutting what I can. The things that I don't need. Just throw them overboard. We don't want the Titanic to sink. We already hit an iceberg. I think we hit 2 icebergs. We need to try to stop this ship from sinking, so we need to throw over the unnecessary luggage / people / stocks. We need to get rid of it. Raise the capital, because I'm sure everyone is running low on cash to dollar cost average. We've been dollar cost averaging for 2 weeks almost. And at some points we've seen signs of life, but it is what it is. So I'm thinking about picking up this FAS Financial. All of this it's a 3x ETF, so this could plug some holes. I'm thinking. I'm not a super big fan of the financial sector, but my portfolio is obviously lacking financial sector. Now, the holdings on this... How do I see what the holdings are? Well, that's... I don't even know, but I was looking on my phone before. Oh, let me just look on my phone again. But I mean, it's what you would expect, though. It's literally what you would expect. Over to the 15-minute. Oh, it's coming down. Hallelujah. Okay, so what's the asset allocation? I need to add it. Is that even possible? How do I add a asset allocation here? Huh. Not sure how to add an asset allocation on my desktop, but whatever. I don't have time for this. But on the mobile, it's right in front of me. So yeah, I mean they have the Dreyfus government, the Berkshire Hathaway, JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, BlackRock, Goldman Sachs, Morgan Stanley is the top 10 holdings. So during this little dip that we've had going on, let's go out to the day chart. This one is probably not. This one's probably holding. Yep, this one is holding. So the dip started on what, February 16th, I believe. So yeah, so literally when the tech and everything started going that way, this one started going that way. So you know, and this fits my portfolio. Like I could see myself holding this for some extended period of time because this is managed by the Direction, which is the same as those other 3x bulls I have. You know what I mean? So I could see myself adding in a financial sector. I mean, I've got the I got the tech sector, I've got the NASDAQ, S&P, and Dow. And yeah, I mean, I can see myself adding this in. Like, why not? And maybe getting rid of it later at some time. Not such a big fan of banks, but could do something like that. And then instead of doing a short, so we would just try to do this and capture some gains. Because the market's not crashing. So this is the thought process. Since the market is not crashing, so I wouldn't necessarily just want to start shorting everything. But although you could, and you could make some really good money right now. I mean, it's a different thought process. So instead of that, then I'm thinking, well, just buy some of the sectors that are doing well right now. Okay, so I did add this onto my watch list, right? Yep. And also the ERX, but not that interesting. This is the energy one, the energy bull, also managed by Direction. So as of like the entire time since COVID, it's not doing good. But if we zoom way in, and this is on the day candlestick chart, I mean, we're just doing pretty good since like November, which is pretty much when oil started going up. I mean, that's basically all there is to it. I'm pretty sure. So yeah, there's that. I'm not really interested, but I'd be more interested in adding this one into my portfolio. So just depends on how much cash I can get. I can go into some leaps, 470 days out. I could probably get a 71, 68 just to get cheaper position, to be honest with you. That's going to be around $3,000. I could probably raise 10,000 in capital. Throw 10,000 at it. Could be interesting. That's something that I probably will do. Yeah. And then maybe dollar cost averaging some other things. Yeah. We can actually go ahead and buy this, can't we? But not the options, though. Soon. But I mean, there's another one that I was looking at. And these are ETFs I'm looking at right now. ARCs are down. I think it's OGIG. Is the O Shares Global, what's it called? O Shares Global Internet Giant. So this is a like the global internet giant companies, like not just the American ones like Google, also could be Jingdong, Pinduoduo, the Chinese ones, but global ones. So this one could be interesting as well, because it's going to be on a big discount. Actually, even more than our other ones, because this is broken what it was on the 23rd, which not even Soxel is doing that bad. So if you're looking for a cheap deal, I mean, the internet companies are getting hammered the most out of all of tech and growth, because even though they're making money, but just people think that, well, the economy's opening up, so I think the Jets ETF is going to go up. American Airlines is going to go up because, you know, there's going to be more travel in the summertime. You know, and then, oh, the bond yields are going up, so banks are making more money, loaning out, I guess. You know, I don't know. That's the basic thought. So this one could be a really good pickup, because since the March dip, it was down to $20, and then it was up to about 64. I mean, that's a good 3x right there. Of course, we could always dollar cost average it. I'm game. I'm definitely game to dollar cost average this one. But you know, this is a little bit more, it's going to be a little bit more volatile. So if you like roller coasters, buckle up. there's a lot that's flat right now. People not really sure what's going on. Another interesting one that I wanted to look at was the OUSA, which is a dividend. It's got a dividend of 2.19%. Yeah. Let me pull that one up, see what the say. It's also another O shares, which that's the Kevin O'Leary, I think his name is, billionaire. His little custom ETFs. But anyways, yep. So the asset allocation for OUSA is basically you're getting a 2.19% dividend, which is not all that great, but there's a growth in it. It's not that there's no growth. Yep, this is the OUSA, so a low of 24 and it's up to 38. I mean, not all that great, but it's like what, 50, 60, 70%. And that one is going to be way more conservative because it didn't dip that much and dipped down like taller and stuff, you know. So that you could switch some things into that. Well, that's not very interesting. And then the asset allocation is it's going to be Johnson & Johnson, Home Depot, Pfizer, Apple, Procter & Gamble, Verizon, Merck & Co. Inc., Cisco, and Amgen. That's the top 10. You know what I mean? So that would be, that wouldn't be that bad. We'll see. Are you holding NNDM? Yeah, I think so. I'm about to cut a bunch of things though, guys. I'm seriously about to cut a bunch of things because the options are not going to be very useful to us, because the best case scenario, we trade flat for the rest of the week and maybe next week. Like, I think there's a high probability, because look, the honest truth is things aren't going to change until people decide that the economy is not really going to improve more or like open up more. It eventually people will be like, okay, well, that's the most that these banks should go up, or like the recovery stocks maxed out. People eventually will get to that point, but until they do, it's not going to go back into growth. So I mean, there's obviously going to be some money managers that are going to be buying up these cheap deals, cheap stocks right now for sure. All right, we got 6 minutes, but you know, I wouldn't just have so many high hopes, to be honest with you. It is what it is. If we see a green day today, it's hallelujah. Pretty much. Zach, your clickbait scared me to death until I looked at futures. I'm 52. You're gonna give me a heart attack. Hey Troy, I appreciate you tuning in, man. Thank you. Appreciate that. I don't even remember what my clickbait was. I'm going to, oh yeah, the title was like, I'm going to war with the, I don't even know. I don't really take it very seriously. I think O shares is Kevin O'Leary. Yeah, that's what I was looking for. I think I might have said that. It's Kevin O'Leary, the billionaire from Shark Tank. I like Kevin O'Leary overall. I think it's really smart. Obviously a savvy investor. He is currently shorting the airline stock, and he's buying more tech stock right now. So, and I saw an interview about that from him. I don't remember if it was some news channel, and so I got to thinking like, okay. So there are people that are thinking the same as us right now, and I mean, there are people that are thinking the same as us that have a lot more money than us, and a lot more contacts and a bigger network and more researchers, just overall in a way better position than we are. So I just look into things like that, and then I just think like, well, okay, so calm down, everything's gonna be fine, and we're gonna keep buying the dip, because if we look at the NASDAQ, which is hit the hardest out of the indices, yeah, this has broken our support. So yeah, It's bad. This is definitely a bad dip, and hopefully that is the bottom. We're almost down just a little bit more. We're going to reach this peak 302. But nevertheless, we're going to keep buying because I'm not a sucker. I'm not going to start selling everything and going into these airline stocks and these other things, the travel stocks, because guess what? What if we reach summertime and people don't have any money to go on vacation? Did anybody ever consider that? What if it's not as many people flying around as you thought? I'm not convinced is all I'm saying. I'm not convinced. Probably it'll be more people than are flying today or last quarter, but I think maybe people are expecting a little bit too much from it. So I think that there will continue to be a transition into these. That's why I'm thinking about getting the FAS, and then soon there will be a transition out. But when people are just tripping absolute balls is the time to be buying these things, in my opinion, because these are tech stocks. They aren't going anywhere. 5G technology's rolling out. We're going to freaking Mars. I mean, you know, the electric vehicles are going to be the thing, guaranteed. In the next 5 to 10 years, they will be everywhere in your local neighborhood. Because they are everywhere in my local neighborhood right now. You know what I mean? So yeah, just letting you guys know, but you guys are very smart. And that's why you're here, is because you're very smart. And I know that you know that. What do you think the floor is for CCIV? It seems to blow through all support. Well, everything kind of is, though. The floor is, you're trying to find a number for the floor, but don't think about it as that. You can't really draw a lot of lines and expect to be find a floor. Senate expected to begin, oh, what was that? Senate expected to begin debating COVID-19 package on Thursday. That's today. Yes. Come on, guys. Hurry up. Let's see. I want to show you guys something. It's one of my favorite memes. I'm going to show you guys. Favorite meme. If I can find it. Found it. I think. Not exactly. Oh, it's because I'm on Bing. That's why. But yeah, I'm not gonna start freaking out and selling everything right away. I want to see which way it goes. I mean, if the market start moving up today, I'm not gonna, you know, I wouldn't do anything. I would just hold it. I would hold off. You know what I mean? Yeah, look at the airlines pre-COVID on huge downtrends. Right. That's exactly right. CCIV was hyped spec plus EV tech. That whole sector is down, so not much you can predict for it right now, for sure. Jerome Powell to speak today as well. I mean, with the rising bond yields, which are not even rising that much, if you put it into perspective, you know, the government might step in though, so we'll have to see. But yeah, let's see if I can show you guys this. That's my favorite meme, technical analysis meme. So just stop trying to draw lines and trying to find the bottom. We're gonna find the bottom when bonds yields stop rising, and then money goes back into EV. Nothing makes sense right now. It's not about how good the company is. It's not about how much money they're making. It's not about their earnings report. It's not about anything except the money managers, the whales are moving money out of tech and growth and into the recovery stocks. The financial ones are benefiting a lot right now. All right, market's open. Let's see what's going on. Wow, Nasdaq's going up. Ooh, the green candle. Let's go. All right, let's check out my positions here. I'm gonna start looking into stuff. My arcs are just getting smashed. I don't know. My strike on the CCIV is going to be $29. How bad is that? Not bad. Yeah, we'll see how it goes. And that's going to expire tomorrow, so we'll see how it goes. But yeah, let's see what's going on, first of all. Jumia's, my Jumia call sucks. Costco's probably got a little bit nervous right now, so we'll see about that. The Lee covered stock. I mean, we're making money on the premium, but 3,004. I mean, that's $4,000 I could raise right there. I don't want to switch any of my arcs except for possibly this arc W, but I'm going to take a loss on it, which kind of sucks. But we'll see. Yeah, I've got the NNDM. Yeah. Reggie is... That one still has until March 19th, so I might just hold out on that. But I could raise this money, though. That's the thing. Print, ACIC, oof, down 21%. VACQ, I'm gonna hold it. ACTC, Solo. The Solo one is not doing good. Well, it's going up today, so yep, we're gonna have to do this. Sell the covered call on it. Can we get anything? Oof. I sell it a month out. How many of these do I even have? I only have 100 shares. Not even that much money, huh? $179. Well, let's see. What can we do here? I mean, I doubt it's gonna... Well, it could pop back up, though. Hold your horses. My cost basis is $8. Okay, let's see. So if I sell it for 8, I mean, I'm just not gonna get any money here, so sell it for probably at a limit order for 0.5 maybe. See if that hits. Sell it for 36 days out. Just try. Yeah, we're gonna do that. We're probably just gonna hold off, and then we'll actually break even if it finally hits. If it does actually hit that in a month. It is what it is. Okay, it's off and away. Okay, what's next? Ooh, I see green, but I'm not holding my breath. Okay, let's see what else is good. The Pershing, we're not doing so bad. Do we still have a working for that? No, we don't. What's the price for the Pershing square? 26.91. Probably getting into the O more would probably be a decent hedge, actually. O, which is real estate, plus the FAS. Think about it. ACTC is the ACIC. Oh man, I always get those mixed up. ACIC is the rocket one, isn't it? Yeah, Atlas Crest. Always get those mixed up, but hey, we're gonna chill on that. We're gonna chill on this one. Brent, we're gonna chill on. I mean, we could raise his capital though on the ACIC. Hard to say. ACTC. Also coming up 1%. Okay. Things seem to be coming up a little bit. Reggie is just a killer. Let's see. ARC W still down 2.4%, so we're gonna hold off on that and maybe even sell it. And the CCIV is just down a lot, but I'm actually made a decent amount of money on these premiums. So my average cost is 30.6, and then we also had the Nano. We could try to get. Oh, it's coming up. We'll see. Probably should just chill. Let's see what's up. Okay, so S&P is doing all right. Dow is up 0.5%. S&P's up 0.5%. Tech is up. ARK is up a little bit. SMH, the semis are flat. Okay. Sparkline, things are still moving up for the most part. So let's wait. But if I had to raise capital on anything, it probably would be the Jumia. I would cut it. Right? Probably. Okay. I just close the Jumia. And then the next thing I would raise capital on, I would like to do it on these 30 random shares I have of ARKW. There's no need for those because I can just do leaps in the future. The Lee, I could get out of those. It's not that bad of a loss. I could get back a decent amount of money on those. I'm gonna close it. I'm gonna do it. Yeah, I'm gonna do it. What can I get for those? I'm gonna buy to close this first of all. At what? Buy it at 30. Just whatever. Just market it maybe. Buy to close 4 of those. Get out of it. That position is not needed. I didn't see any freaking Lee cars today anyways. Jesus. I only saw Neos. Actually, that's not true. I saw one Lee. It was already dark. They have a really cool headlights, by the way. Alright, boom. That one's closed. And then my Lee stock here. Where are you? Get out of here. Yeah. We're not down that much overall. And it's 400 shares, so I hate to do it. I kind of hate to do it. 23.20. I could sell them for 23.40 maybe. 23.35. Yep. And all 400. Yep. Do it. And I'm not posting these on Twitter yet. I'm gonna do it just all at one time, I guess. Okay, let's see if those close. I got a bunch of random small things, but those are some of the free stocks I got, so disregard those. I guess I should just hold them, huh? Let's check the spark lines. FAS is up 1.8%. Heh. Soxel is down. Sox, yeah. Would be, huh? What? Okay, so what's going on with this Lee? That's like $9,000 right there. Yeah. And I'm gonna go ahead and do that. Let's see what it feels for. 2316. Okay, I'm raising capital. Now the first thing I wanted to do was get into possibly an FAS. Option I could put. I just raised $10,000 of capital. So, put it into a call. 470 days out. 68, 69, 71 delta, 75 strike. Save a little bit of money here. Go 69 delta. That's definitely a cooler number. And then let's go ahead and put it at 2,900. I wonder if we could hit it. Maybe $2,800. We put it at 2,800. We can get these maybe what? Three of them. Nope. Let's dollar cost average. Let's get 2 of them right now. Maybe just 1. No. Let's get 2. Want a little bit of skin in this. So that's at the financial sector 3x. That one's off. NASDAQ is up. Semis are down. My portfolio is probably just 0. Yeah. Literally 0.12%. That's funny. Alright. And then the CCIV could consider it. $2,500. Oh, I don't want to do that though. This really sucks. I wonder if I could close this. Probably not even. Thanks, huh? Well, we could try. Yeah, I mean, I can get some money here. Get some money flowing. Already got a working order here. So modify it. That's gonna be what? $100. It's not really even worth it, is it? But kind of just looking at that, I'm annoyed. So yeah. Oh yeah, those filled. Oh, it filled for 0.18. Better than I expected. That's cool. And why isn't my FAS filling? Put it at 28. I wonder if I should just buy commons. Right in the middle though. Right in the middle. But a lot of more people are wanting to buy it than sell it. So, okay. Okay, what's changing in the markets? Just everything starting to go down right now. All right. What about the FAS? A little bit. What is it's I don't even know what's the right thing to do here. I'm thinking about possibly canceling this order. Let's cancel this order here. Okay, that order was canceled. And then go back over to this financial sector 3x. I want to get some. I want to buy some commons for now. Could wait till it pulls back a little bit, but I want to start dollar cost averaging in. So probably, how much would 50 shares cost? 4,000. How much did I just raise? I raised about 10. Seems like it's pulling back. I mean, we could always put the limit order in for 86. We could put 4,000 into this. 50 shares. Seems interesting. Extended hours, yes. Time in force day. Okay. Let's go ahead and put one of these in for 50 shares. Okay, so that's in. And then what we're going to do is go to the options and get a leap for the 60, the 80 strike for 70 days out. That's going to cost probably 3,000. Put in the, so that would put me at, yeah, there about 7,000 in it, and then I could put another 3 if I needed to. So yeah, let's go ahead and put this one. Okay, that actually filled 29.45. Cool. We got one position in that. I wouldn't mind adding that to my portfolio anyways. And what's the damage? Down 2%? Oh. Dow is still up. Never thought I'd see the day. Oh, my AS 50 shares just got filled at 86. Okay. All right. Well, we are we are doing stuff. The Dow is not holding anymore. That's okay. Neither is O. So what we want to do now, what is not going down? Palantir is up. Even ERX is flipping. The spark line is flipping. Bitcoin is 49.6. Yeah, even the oil stocks, they're starting to go down a little bit. All right, well, there you are. So, what else can we do? Yeah. This one, I probably need to close the selling the put of the CCIV. Because I already have 100 shares of it. I don't really want any more. Not when the markets are going down like this. Probably would not be smart. So we're going to close that. Okay. That one's closed. And let's see. FAS, both of my FAS is in, so that's cool. The Reggie, I still have some time, but I could raise the capital. I could raise 2,100. All right, yeah, I think so. Costco seems to be going up. Let's check it out. The earnings are today. Yeah, it's not that bad. Looks bad, but it's not that bad. Yeah, Shanghai was down. Hong Kong was down. Pretty much everything. Dow was barely holding on. S&P is not that bad, but NASDAQ is. So yeah, Costco is coming out at what time? Don't know. Not exactly sure what time, but it's coming out. So yeah, the Dow's barely holding on. SPY is not doing so bad. NASDAQ is only down 0.3 so far. All of the ARCs are down to ARC G is 3. The lithium one is down a lot. I mean, yeah. Um, yeah. Okay. So be it. We're going to war. What this is about. We're going to close the GEVO covered call. We're going to buy it back. Yeah, I figured out what it says about your average price. It will increase by how much you buy it back. That's what I think. That's what we were messed up on a couple days ago. And then, okay, so I just did that for the GEVO. The Pershing I'm going to keep. The GEVO I'm down a decent amount of money, but this is still worth $3,000 I could raise right now. So I'm pretty tempted, to be honest with you. And we're going to do it. And those closed for average of 750. Okay, we're raising money. Yeah, this is literally Titanic mode. We have to plug these holes and then put our money into something that we believe in more longer term, which is going to be our longer term positions. So I still believe, I'm still saying what I say. Cut the short ones, cut the unimportant ones, and put them into the ones that you really want. Then hey, I mean, you can always write off losses on your taxes. So, not the end of the world. Let me check in on the chat. SOXL is killing me. Yep, it is. Good times. I know, right? I guess we could buy some more. I'm actually thinking about it. SOXL and TECL. But it would just be more along the lines of averaging in here. Nothing too crazy. So, there's always that, and let's see. ECTC I could get $1,800 out of. It'd be interesting. I'm not gonna lie. I would like my $1,800 and then buy more SOXL, TECO, and maybe even some FAS. Speaking of which, what orders are working? This solo thing is working. Yes, that's right. Modify. Let's just cancel it. Okay. Cancel that. We'll reevaluate this a little bit later. Okay, and then the nano. I'm going to close this covered call as well. And then I'm going to reevaluate everything. I probably should put... I'm taking a screenshot of everything. I'm going to post it on Twitter. And it's going to be a lot of pictures. Okay, the nano covered call is closed. Also, we can buy more Apple. Yeah, I'm getting excited. I'm legit getting excited right now. I have a lot of money. Oof, down 3.42%. Let's see if we can find a bottom here. How's the FAS doing though? It's going down. Voxel is down 6%. Yeah. $32 now. That's crazy. A couple days ago, it used to be 600. Yeah. Well, that's the beauty of the 3x leveraged. Be prepared for those horrible days. Look at these candles. Last 3 days, I mean, oof. Well, let's see how it goes. And we're gonna check in on the good old market watch soon here. But let's see. I raised a bunch more money now. So, how's my FAS doing? I'm actually up on the 50 shares a little bit. I'm a little down on the leap. I think the reasonable thing here to do would be to get another leap. Create a new order. I want one more. I want to pay maybe 2,800. I don't know if that's gonna hit, but we'll see. And how's the RW? I mean, Pershing Nano, I could get $800 out of. Good times. RKF leaps 57 for $1,200. Dang, that's a bargain. Heck yeah, can't wait for lunch. Checking back then. Good time to start buying, yeah, for sure. Well, question is, what should we buy? I'm doing a lot of rearranging here, guys. A lot. My portfolio will look a lot different tomorrow. Print, I don't want to get rid of print. Pershing, I also don't want to get rid of Pershing. BACQ, I don't know. And Solo, how you doing, buddy? Down 5%. Crazy. The Solo, I probably would get rid of it. There's just better things that we could be spending this money on right now. Things are so cheap. It's not that I don't like these stocks. I do like these stocks. Problem is, I prefer to put them in REITs that are paying me dividends at least right now, or in some the financial sector, or even more Costco, to be honest with you. Which I don't know how that's going to end up today, but we're going to see. Alright, what the Sparkline's doing? Not anything good. Voxel's down 7%. FAS is still holding on. So is Dow. Yeah, that's another thing. We could put it more into the Dow Jones. It's not doing all that bad. That's a good point. That is a good point. In times like this, like specifically like this, good to be in the Dow, but oof. Yeah, because that didn't dip all that much. S&P not looking very good. And the NASDAQ is looking pretty bad. To be fair, we're approaching 180-day moving average. probably we're going to go down to the 180-day moving average. So I'm actually going to hold off on buying some of these. Because worst case scenario, we go down to the 180-day, then I buy them for even cheaper. So I'm just going to raise money right now. Or if we don't go down to the 180-day and we start going up, then yeah, that's fine too. The Soxel, though, that one's hurts. So yeah, we'll see though. Semiconductors are still good. What's going on today? Water and related utilities, oil and gas is up. Beverages, we'll need to drink. So the US is not doing as bad as other places, especially Asia. Asia got clobbered today. China was down 3, Shanghai was down 2. So yeah. But yeah, NASDAQ it's really suffering. But that just goes to show you that the transition is still a real thing right now. But the Dow and the S&P is not doing all that bad. So I could see myself getting into more Dow. Or just FAS. Or what about the OUSA? Not doing all that bad, but yeah. Who am I kidding? ARCs are closing on negative 4% right now. Okay, REITs are going up. Huh. Yep. Well, anyways. Let's see. What is the... Well, first of all, what's Apple doing? Okay. Compared to everything else, it's not that bad. Oh, we're down 5%. Already. Oh. Might hold on to the CCIV. I do like that stock. And I really don't want to lose the Reggie. Ah. But that one, it's... Oof, that one's getting killed. Tesla's what? 626. Yeesh. I mean, there's not all that much else we could do. Wait a minute. Oh, ArcG is down. Well, let's see. Okay, so on the ETFs, everything is red. Cool. Uranium play, but I suspect the volume is really low on that one. How about NXE? Oof, getting hammered too. Overall, it's still much better than the other things. Man. Yeah, I'm just trying to figure out what else I could raise capital on, but nothing so interesting. Yeah, GE is doing pretty good, huh? Well, anyways. See what the good old Market Watch has to say about this. Also, I want to know what the when the Powell speech is. Did I liquidate my GEVO? Yes. I basically liquidated everything that I don't really need. Everything that's not just necessary for me going forward. I don't want. And then take the money and put it into the things that I could do going forward. Okay, so my FAS got filled at 28. That's cool. Let's check it out. Yeah, wow, we're making money on it already. That's great. Got about 11 in that now. So, in theory, this should hold up a little bit better than the other ones in a downturn. Nickel's almost down. Oof, I mean, Toxel is almost down 10%. It's down more than 9%. Semis are getting smashed. Nice. AMD is down to 70. Yikes. That is absolutely fascinating and is past the 180 moving average. $12 EST is the Powell speech. Cool. So when is that? Couple hours? 2 hours? Okay, well, anyways, here's an article on CNBC. Is my screen stuck on the browser? No, it's on here for a reason. What to watch today? Stock futures lower ahead of jobless claims Powell speech. Cool. Pointing to a lower open and a third day of losses for the major U.S. equity averages as concerns over the level of Treasury yields continue to weigh on Wall Street sentiment. Dow futures implied a loss of more than 40 points, while S&P 500 Nasdaq futures are also lower. 10-year Treasury yield eases but holds above 1.45%. Ahead of the Powell speech. The Dow and S&P 500 have fallen in 4 of the past 5 sessions, and the Nasdaq is coming off of its biggest 2-day loss in 6 months. Yeah, investors are no doubt hoping to hear comforting words from Federal Reserve Chairman Jerome Powell when he addresses the Wall Street Journal Jobs Summit shortly after midday. Due to Monday's strong rally, the Dow and S&P 500 remain higher for the week, and the financials and energy sector are both up by well over 3% for the week. And that's, we just dropped 11,000 in the financial sector bull ETF. The energy one I don't really want to do, but I might. The Labor Department, I mean, it's not necessarily like horrible to hold long term because I'm thinking at least it's an ETF and it's not, at least it's diversified for times like this. It's not necessarily a bad idea. The Labor Department releases this weekly report on initial jobless claims at 8:30. Yep. We already know that. Right. Okay, CNBC. For telling me absolutely nothing. Nothing that I couldn't have just seen on my Webull desktop app. How much everything is down. Thanks. Holly Madison's miniskirt, graphic tee, and platform lace boots are a bold choice. I mean, you might as well just read this instead of this. What to watch today? Stock futures lower ahead of jobless claims Powell speech. Alright. Alright, well, how about Market Watch? Oh. Dow is down. Yeah. Well, anyways, we're going to keep buying it. We're going to keep buying the dip, although we're not going to do anything else today. We already just switched around a lot of things. We done switched around a lot. Two more things two or three more things I'm considering cutting. Oh. Well, and that's pretty much gonna wrap it up. Cutting all these things, switching everything around. What else are you gonna do? And just to ride it out. The Reggie is getting smashed. There's that lawsuit too. Oh, just close it. And the only other thing, basically the CCIV covered call, I got 100 shares left. And then that puts me down to only ARCs, my bull ETFs, no matter S&P 500, Dow, Nasdaq, Echo, and Soxel. And then just some random small ones which I don't care about. And then the print, 3D printing ETF, which I don't want to sell. Pershing Square 25 SPAC, I'll keep those because that's not that much money anyways. The VACQ, not so much money, we just bought those a couple days ago. Going to sell them. And then the 100 shares of Tesla, which is really sucking, but let's just wait. And yeah, that's it. And then that new FAS that I just got, which is already down 2%. But it's fine. That one should bleed less. So it's okay. So, yeah. Seems good to me. Could see myself picking up more financial sector bull ETF. Oh, and then the Costco, I forgot. Those earnings are coming out today, so we're going to hold that. Who knows? Maybe we can get some good news, but I suspect maybe not. So pessimistic now. Because we are at war with these markets. My bad. Thanks, China Joe. I mean, that's what we thought, right? We thought that he was China Joe, but then he went ahead and the first week when he was president, he sent an aircraft carrier in the Taiwan Straits. So who knows? Who really knows? I certainly don't. But anyways, let's see how the ETFs are doing. Anything up? No. Dow is down almost 0.3 now. S&P is down 0.6. Nasdaq is only 1% down. So that's not all that bad. But the problem for me is the semiconductors are down more than 3%, and then ARCs are down 5. Yep, those are the ones that are gonna get hit hard. We'll see. We'll see. We'll see how this speech turns out, and I mean, that's... What else could we cut? I want to cut something. Can we cut something? Don't want to cut the Apple. Yeah. Once things start turning around, I'll put some more money into these things. Well, the last of the CCIV, I guess I could cut. What a clean portfolio now. Okay. Okay. The only thing else for me to cut is going to be the Tesla calls. Did you cut NNDM or ICLN? Yeah, I cut the NNDM. I didn't even have ICLN. Is there really anything he could say that reverses the way the market is moving? For, you mean Jerome Powell? Or Joe Biden? Well, I mean, I don't know. Let's see. But I mean, if we really want to play devil's advocate, we can look at the dips before. This one is eerily similar to the one in September. Look, length of this. Not quite right. That's right. Oh. So that means we could have another couple days not very good before we start to recover, but I mean, not really even be like that. I don't really talk like that. This is exactly as bad as the October one. So, right? Am I doing this right? Pretty much. The October one was a little bit slower to go down. But yep. So we're just a little bit, we're the same as October. We are not as bad as the one in whatchamacallit, September. September was like this. This is just on the NASDAQ. Yeah, so let's just say we could lose another $10 on the triple Q. So if it's the same, which is not gonna be exactly the same, but just for, you know, whatever. So $10, that's another 3.5% on the triple Q. The T triple Q would be 9-10. But hey, and then things start going up, and then it's all dandy. Oh look, SOXL is only down 7% now. I thought it was down almost 10. That's an improvement. Cannot even look at the chart because it's split. People needs to update this stuff so I can look at the chart. FAS is down 1% when I bought it. Yeah, makes sense. But I mean, compared to, you know, the other stuff, that's literally like an inverse. I don't want to do anything crazy today. I feel like the things that I've done so far, I've really just moved around the money from cut my positions that I'm not really attached to. They're not really attached to, not really attached to, not going to perform well if this keeps going down or sideways anyways. And then taking that capital, so raising that capital and taking it and putting it into financial sector, which should bleed less at least, and possibly if this does continue, then this should be up, and it's a 3x one, so you know, we'll see. Yeah, Powell. Yeah, I mean, who knows? He could just make people feel better, or even if he just doesn't say anything bad, then it could be good. You know. Oh, hey, appreciate the donation of the $3. Really do appreciate that. Just saw that. Cool. Thank you a lot. I just don't give AF. Pretty much. Like that. You gotta be like that. But yeah, ARC under 120 is insane, I know. I don't even really want to look at it. Should we? Okay. Let's look at it. ARKK. Yeah. I mean, truth, that one didn't do very bad in the, so this is a really big dip for ARCs, which is awesome because we can buy it cheaper. I mean, $5 cost average down last week. I don't think I got any more this week, and that's okay because it keeps going down. The last 3 days have been pretty brutal, so we'll see. But anyways, we'll see. We will start doing it. just not really in a rush. So I've raised the capital from the positions that are unimportant and putting it into the ones that are more important. And everything I'm talking about, I hope you guys are finding it useful, because that's just a more conservative strategy. I mean, you could buy puts on all of these things, but then it's, you know, as soon as you do, then they go up, or then, you know, it keeps going down and you make money and then you don't sell it in time. I mean, it's just sometimes less is more. You can't make mistakes if you don't do anything. Obviously, maybe not doing anything is a mistake. So, you know, at the least, I would cut my positions that are not going to perform well. I mean, sometimes it's hard to cut those, but nope. I appreciate that. I just don't give a F. Appreciate it. That reminds me, are you on the Discord? If you are, I will give you a diamond hand status. Or maybe you already do. I don't remember. Sorry. But I'm glad that you made some money. What do you think of GUSH? Yeah, I didn't even look at that one, huh? Seems like things might be turning around. It's way too early to talk. But on the spark line, we have a little bit of hope, so we'll see. But really, there's no point to even look anymore. I mean, we did what we could do. Oh, it's the oil and gas 2x. Oh, yep, interesting. Oh, look at that. What? Selling for $18,000? $19,000 in 2018? Well, that's... There's some sort of a split? Or not the split, but the opposite of a split? Probably. What's that called? I forgot. Instead of the shares getting cheaper and you get more of them, it's the opposite. Oh, I don't remember. It's late, right? Yeah. I know. Then gosh, I was also looking at. Let me put this the 3x ETF, even though it's not a 3x ETF, it's a 2x, but that's just put that there, and then we can go look at it. Yeah, I mean it's doing good today, and so is ERX, which is the 3x of energy select sector. No, it's 2x. Daily Energy Bull 2x. And then, yeah, it's 2x. And then the Gush is a 2x. Gush is a 2x oil and gas. So, yeah, those are obviously going to do really well. The question is, should we be buying them right now? And the ERX actually has a dividend of 1.34%. So, I would probably go with that one, because they're both 2x. Well, I mean, ERX is energy sector, Gush is oil, so there is definitely a difference. But wow, I just got a notification on my phone from MarketWatch saying, need to know. Analyst says, oops, need to know. Analyst says tech stock retreat is an opportunity not to be missed. I'm pretty sure that's our boy Ivis. Can somebody please let me know how to pronounce it? Ives, Evis, Eves, Eve, could be Eve. Anyways, what was I gonna do? I was gonna check at the asset allocation difference between ERX and Gush. Okay, so first of all, ERX. ERX, top 10 holdings. ERX, ExxonMobil, Chevron, Dreyfus. I don't even know how to read that. GLDSTST, FNSQ, TRIN, ADM. I don't know what that is, but it's 4.63% of that one. I'd have to search that one independently. Then next is ConocoPhillips, Schlumberger, EOG Resources, Phillips 66, Marathon, and Kinder Morgan Inc. I mean, that's kind of oil. You know what I mean? And then the Gush. Asset allocation, top 10. Oh. SPDR, S&P Oil and Gas. Dreyfus. Gold's Trust. Same as that other that weird thing. So okay. Hmm. It's interesting. Gush. Wow, it even has low risk right here. Thanks for letting me know. The investment seeks daily investment results of 300% of the daily performance of the S&P Oil and Gas Exploration and Production Select Industry Index. The fund, under normal circumstances, invests at least 80% of its net assets plus borrowing for investment purposes in financial instruments and securities of the index, ETFs that track the index, and other financial instruments. Okay. And then our other one, ERX. I mean, also ERX is only $25. But anyways, also is low risk, guys. Okay. The investment seeks daily investment results before fees and expenses of 300%. The fund invests. That literally says the exact same thing. Okay. But it's not the exact same thing. But yeah, I mean, so if the question is which one, Gush or ERX, I'd probably take ERX because the dividend is 1.35%. It's similar. They're both up pretty much the same, although ERX is a little bit more. We could always check this out. A pretty steep line, pretty steep incline. And ERX is also. So, yeah. Seems like things have turned around a little bit, but I don't want to speak too early. But I mean, it's not like there's anything else I want to do. I mean, there's not really anything else can really even do. What are we gonna do? I have basically thrown all the extra baggage overboard and tried to plug a little bit of the holes with the FAS, which, I mean, it's down 1% since I bought it, but the thing is, those other things that I had just sold would probably be down more than 1%. You know what I mean? So, yeah. Waiting for the Costco, and then we'll deal with that tomorrow. Yeah, oh, the ARC W, I guess I could sell that off. Don't really want to though. And Tesla's gone up a little bit. That's good. Only down 1.7% today. It's not so bad. I mean, it bottomed out right here and then it popped back up a little bit. I mean, whoa, is that a green candle? Don't play with me like that. What? Oh my god, did you guys just see that? Weird. Eh? Huh. Yeah, I mean, it was down almost 10%. And now it's down 6.5%, so this should have a wick at the bottom. Oof, the weak. Weak is weak. But anyways, it'll bottom out eventually. You can't really complain because we're so much. And I don't really plan on selling it. That's the thing. Semiconductors, it's tech, like our boy Ivis said. Our boy Ivis said, don't sell it. He said, buy more. And he's got a Fireball motorcycle. Ways. Yeah, the Nasdaq is almost breaking even right now. That's cool. What's going on? Cool stuff. Well, anyways, that's what I did today, guys. Breaking out the face paint. Going all Sparta, throwing over the extra baggage into the North Atlantic. We just hit an iceberg again. I mean, we can literally see the iceberg on the charts. There it is, right there. An iceberg. And our ship sailed right into it. That's funny. I actually kind of want to draw this out. What does an iceberg look like anyways? Is an iceberg blue? It's really stupid. I'm literally drawing this out right now. I don't think you guys can see that. Here's our iceberg. So stupid. We put a boat. That doesn't. Anyways, Nasdaq is almost even, so there is the silver lining. I really don't want to buy the oil. I don't want to have to do it. It would stop the bleeding. Assuming that there's more bleeding. Let's see, that's the thing. But I mean, geez, those companies like our boy Ivis said, those are some good deals though. DocuSign, Apple, Facebook, Google, Amazon's flat, so forget about them. You know, there's a lot of good deals. I wonder if we could do an Amazon Condor. How's that doing anyway? Probably it's dropped. It must have dropped. Oh, Amazon's up 1% today? Get out of town. But yeah, it definitely dropped because that was our initial Condor, and we had actually sold that for a profit in between these two blue lines. Amazon's up 1%, okay. Wow, there's more green going on here, guys. TQQQ is more breaking even. The S&P is more breaking even. Dow is up. Soxel's only down 5.5 now. I'm up almost half of what it was. That's interesting. You know, days like this, Nasdaq is leading the way now. What about the FAS? Gosh. Yep, like I said, sometimes it's better just to not do anything, but okay. Pretty much just like that. Okay, so yeah, but on days like today, CCIV stopped bleeding. CCIV is actually up almost 1%. Of course it's going to do that as soon as I cut it. I'm pretty sure Bill Ackman is watching our stream, and he's just buying billions and billions and billions of dollars worth of all of these things, moving the markets. But hey, anyways, it's good. I'm happy that things are going back up. But man, it's an emotional roller coaster ride, though. Jesus. And I'm still happy with what we did, though. I don't regret that at all. I need to raise the capital. I'm still 32 and a half Ks deep into options here. Although most of them are leaps or the longest terms we can get on some of those like arcs and whatnot. So yeah. And then the only thing we really did is cut the ones that are not needed if we go flat, because yeah, it's up right now, but tomorrow it could go back down or just be flat. And what else? And then put the money into put about 11K into the financial sector. And considering doing the energy ERX actually has a dividend, good. That's the thing. We really wanted to do something like that. Why not just put it in? Because O didn't go down. To be fair, O went up. Well, I mean, it's just in the middle. It's always in the middle. Plus, you're getting 4.5%, 4.6% dividend actually. Because if we go to the REITs that I have saved here, dividend yield is 4.66%. You know what I mean? Man, my Crown Castle is going up. Dividend yield on Crown Castle is actually 3.52%. And I haven't talked about Crown Castle, but it's actually a company out of Houston, Texas. It's an REIT. They operate and lease shared wireless infrastructure and is geographically dispersed throughout the U.S. and Puerto Rico. The company's segments include towers and small cells. As of December 2016, it had approximately 40,000 towers and other structures. I mean, you guys get the point. It's like the cell phone towers, fiber optics, things like that, and it's a real estate. So yeah, that's an interesting one for myself. Yeah, it used to be. I used to have some position in CCL. Crown Castle International Corp. The analysts are actually all bullish on this one. The lowest target price here is 155, and everybody is saying buy or the minimum hold it. So yeah, I mean, it's not bad. I mean, hey, you get 3.52% dividends. You know what I mean? It's not as good as O, but it's kind of also flat though. During this dip, it's not. It's really taken a beating since 23rd. Gone from 166 to 151. So yeah, not doing so great. But it's recovered everything from the pandemic. And actually was higher than before the pandemic. So it's all relative. After the pandemic, it's pretty flat, but not so surprised. You know? That's not all that bad. But let's go out to the monthly and just see how interesting it can be. I mean, and the point is, days like today, it makes me want to just throw everything into O or some REITs. But that's a horrible idea, though. Don't do that. But yeah, since 1998, it was $7 almost, and now it's 151. So let's just divide that out. So 151. How many years was that? So it's 2021 minus 1998. So it's 23 years. Right? Sorry, I lost my train of thought. Let's change over to the percentage. My graph. So currently it is up 1155%, let's just say, since 98. So 1155% since 23 years. Yeah. So that's 50% a year. Am I doing that right? Sorry, I'm drowsy. It's really late where I am, but you guys know that. Apologize in advance. But yeah, so that's an average of 50% per year, including the 2008 real estate bubble. So that's pretty good. That's better than O. But O has a little bit better dividend, though. That's the thing. But yeah, O is up, what, 660% since 94? So 660% since 94, and 94 is at, what, that's 27 years? About maybe 26 and a half or something. That's 24. Yeah, that's what we were doing before. What we calculated before. So, I mean, hard to say. But I mean, you get a 1% extra in dividend, which you could reinvest. But anyways, those are not all interesting, to be fair. Could do a little bit of both. And then AMT is American Tower, which was another one. The phone towers, and could be interesting for the 5G and stuff like that. But they're all over the world, not just in the US. And they are up only 1,000%, and they have a lower dividend also since 1998. So I would say CC Crown Castle pretty much. I would say Crown Castle would be the most interesting of those. I mean, Crown Castle and O. O is paying monthly dividends, so you could compound that every month. So it just depends on how you think about it. There's no wrong answer, but I would say those two would be the most interesting. But see, that's if the real estate market is healthy, which it is relatively healthy right now. Of course, it might crash later when they start raising the mortgage rates, which I kind of hope it does, to be honest with you. But yeah, I mean, it's relatively safe to be in right now, so it's a decent hedge. That's all I'm trying to say. Because it stayed flat the entire time after the pandemic almost. And it is still on sale. I really think these, especially the O, is still on sale. Like, it could easily, I mean, not necessarily easily, but it'll eventually get up to the $80 level. I mean, that's pretty much whatever all the analysts are saying. Don't know who these analysts are, but somebody. They're somebody's. But 63, 70, and 79. I would also say that's very reasonable, because it was trading at, and it was going right. It was following on the day chart. It was following the 50-day really closely. It almost looked like a VWAP, but actually that's the 50-day until the COVID. I think people are a little bit nervous getting into the real estate trust right now, because of the interest rates are so low, and I think most people think like, well, they It only can go up from here, really. And if they raise the interest rates, then real estate should suffer. But anyways, just specifically speaking of hedges. Well, Dow is still up. S&P 500 is still up. Nasdaq is up almost 0.5% now. Semis are not doing well still. But it's not so bad. The oil is up almost 5%. Yeah. Things have gotten better. And except for my FAS, obviously. Obviously. No one's not going to get better. But yeah, things are coming back, so that's cool. But I'm still happy with that because probably tomorrow it'll all switch. It really is a roller coaster ride of emotions. So I'm pretty happy with the progress that we made today. Yeah, the vaccines are not doing bad. That's why we could have possibly have gotten into the, what is it, like OGIG or something? Over here. ICLN is down 1%. The ARCs are not doing very good, but of course they've gone up about 3% since messing around with this SPAC ETF. That one's very interesting. Yeah, but I think it's OGIG. No, that's the global internet one. It's the OUSA. OUSA. Yeah. Actually up 0.2%, 2.26% today. And the thing is, where are you? OUSA, yeah. That's the second highest one on the ETF thing. Sparkline says it's shooting up, but nevertheless, the dividend here is actually 2.19% compared to, I mean, the next, sort by dividend yield. Yep, that's the best thing. The next one would be the DIA, Dow Jones, then the SMH. But yeah, the SPAC ETF would be interesting. I don't know how well that is managed though, so I cannot really say, because if the SPCX is managed well, then that would be very interesting to buy. But I don't know how well that is managed. It's very new. It just came out in mid December, so. But hey, I'll tell you where my buy zone is. My buy zone is here. Somewhere down there. J&J has vaccine approval in Europe in a week or two, and has the advantage it only needs one shot instead of two. Yeah, that's what I was thinking, because that one, it was the OUSA. Let me double check that, the asset allocation. OUSA. But yeah, I was looking at that. I saw an interview with Kevin O'Leary. He was talking about the OUSA and the OGIG. So, okay, well, let me look into that, because he was also talking. Earlier today, I saw him was saying that he's shorting the airlines and just buying the tech. He's not falling for this BS right now. But anyways, asset allocation of OUSA, they are 99.76% stocks and only 0.24% cash. And Johnson & Johnson is the biggest. And it doesn't tell the weight, but top 10 holdings is Johnson & Johnson, Home Depot, Pfizer, Apple, Procter & Gamble, Verizon, Merck & Co., Cisco, and Amgen. I mean, the first and the third is vaccine. Home Depot makes sense during the pandemic, because people would board at home and they spend more money on improving their home. You could make an argument for that. And yeah, you know what I mean. And then the Apple is just sucks. And then the other ones I wouldn't know enough about it off the top of my head. So, but yeah, I mean, OUSA. Could be interesting, actually. But it's just not going to be enough J&J. So I don't know. If you really want to make a play on J&J, I mean, it's probably not the way to go about it. But still, though, those type of things are looking great now. Well, anyways, I guess the only thing left to do is wait for the Powell speech, see what he's got to say, and I guess we could always look at Market Watch, huh? Or just read some news. Things have turned around, though. NASDAQ is down 0.22, really? Really? Okay, well, triple Q is up almost 0.5. Yep. See what's on the front page. Still the fire motorcycle. Opinion. The inflation tantrum scared investors. Here are 8 tech stocks to buy when it happens again soon. What do you mean? Kathy Woods. High flying ARK ETF just entered a bear market. A sign of the times? It's all good. I'm more concerned about my Soxel entering a bear market. Opinion. The inflation tantrum scared. Make sure you guys can see this. Okay. The inflation tantrum scared investors. Here are 8 tech stocks to buy when it happens again. Worries over accelerating inflation will persist this year, giving investors a buying opportunity when stocks falter. I feel like we already have a buying opportunity. If you didn't buy tech stocks during the inflation tantrum last week, don't worry, you will get another chance. What are you talking about? When was this? When did you write this? It was written yesterday. Google's up 1.5, Amazon's up 1.4. Interesting. Apple's up 0.74. Holy crap. Okay. I offer 8 stocks for your shopping list below from a tech fund manager with a great track record. Okay. Is it Ivis? First, here's why we'll see more inflation tantrums. Inflation is going to pick up. Yes, that's true. People are ready to get out and spend money and be happy and live life, says Kevin Landis, who manages the First-Hand Technology Opportunities Fund. The unleashing of energy will be really powerful. We are all going to hold our breath and see if that means inflation or not. Okay. Am I too hard on these people? Is it just so negative for you guys? Am I just so negative about things? Because these articles make me want to just so sarcastic and so like, is it too much for you guys? Let me know in the comments, please. And while you're down in the comments, smash the like button. Thank you. I mean, well, anyways, who wrote this article? Who said that? Kevin Landis. We have another Einstein, guys. He manages the TEFQX. Okay. Let's see this. TEFQX. First-hand technology opportunities. Well, what about second-hand technology opportunities? No data. Oh, it's a mutual fund. Okay. Yes, well, don't want to buy that anyways. It probably will say two economists I follow. It probably will say two economists I follow. Inflation will rise 2.2% by year end from current levels of 1.5%. Predicts Jim Paulson. Yeah, I tend to believe that. Ed Yardeni of Yardeni Research predicts it will go up to 2.5, 2.8. Yeah. Also could see that bond yields will keep going up. The 10-year will reach 2% by the end of the year. Yeah, I also think so. I think it's probably going to be 2.2, in my honest opinion. Because we could actually search the 10-year treasury. And then we want to go. I just check out the graph. I posted this in the my Twitter, and I posted it on the Discord. So yeah, it's 1.46. Okay, show me a chart, please. Anyways, yeah, I think it'll be 2.2. Sentiment remains rich. This makes the market more vulnerable to pullbacks. Complacent investors are easily surprised by unforeseen events. Corporate insiders are cautious, also a sign of vulnerable market. Yeah. And then pullbacks are normal. Following the 74 to 98% rise in the S&P 500, SPX, NASDAQ, since last March, investors may have forgotten that stocks can go down too. But pullbacks of 5 to 10% are common. I mean, that kind of sounds like an article that I write. Come on, this is Mark. Come on, Mark. Stonks. They might as well just said, stonks don't always go up. Don't forget, stonks can go down. Pullbacks of 5 to 10% are common. Now that so much of the growth is priced into stocks, we will see more of them for sure. That is probably the most truest thing that they have said. Stonks don't always go up. We will probably have at least 3 or 4 more panic attacks over the next few months. I also agree with that. Okay. Landis. Evan Landis. This mutual fund that I cannot buy. Honestly, this has been the most entertaining part of the stream. We should heckle more of the talking heads, I know, right? Gosh. If we watch YouTube videos of the actual talking heads, am I gonna get copyright strike? Something like that? I mean, I don't even have monetization on these videos or anything, so I guess it doesn't really matter, right? But I guess the news though, I think the news would fall under like something that we can play, right? If anybody knows, let me know. I certainly don't know. This is all just such a joke to me. Alright, well anyways, here's the 10-year. So let's zoom way out, because if we're zoomed way in, it's just like, oh my god, it's going up so much. Please stop going up. But if we zoom out, oh come on, let me zoom out a lot farther than that. How do I do this chart? This is a lot suckier than Weeble. 1 year? No, we need to do max, boys. And then zoom out on the max. Okay. So this looks better. Okay, well where is it? Okay. So this was back to the year 2000 from the beginning of this chart. So as you can see, these things, the 10-year treasuries do go up. The period of going up can last for about 6 months, about half a year, it seems like. And we are already basically at a half a year, because if you see these columns, gray and white columns, that's 1 year, or represents 1 year. So if you just go back here, I mean, this one went up about, just say half a column. Just eyeballing it, okay? Don't have time to calculate these 10 years. But So anyways, this one has gone up a decent amount, and you see the slope is down. Can I draw lines on this? Maybe I can. Oh, so how do I draw one here? Line. How do I draw? I don't want to. That's kind of interesting. Dude, get out of here. Stop it. Can we look at this on Weeble? I wonder the TNX? Check really quick. Oh, snap. And okay. See ya, Yahoo Finance. We're going back to Weeble. Okay. Yes, this is the TNX 10-year Treasury, and 10-year Treasury yield. Now, why is it at 14.64? Maybe 1 point. Anyways, doesn't matter. Probably it's just something else. So let's go over to the month chart. Okay, so now we can really do some technical analysis. This is going to be fun. Can we do a super trend? Holy crap, we can do a super trend on the TNX. That's cool. So what are we on? We're on the red one right now. But of course, this is a month chart. So anyway, super trends and this Bollinger Bands, VWAP. Yeah, the MA though could be interesting. Let's go ahead and input a 180 MA. Okay, so that's almost interesting. I mean, this is really, this is a, can you guys see this? Let me make sure. Okay, this is interesting. Let me draw some lines from this top. Wow, that is pretty close though to the 180. So going based off of this, but really almost trading at a parallel channel. Seriously. I don't know, it should be here, down here, but more or less, let's just say. And then the delete looks pretty good. I mean, we could definitely move that up a little bit. Yeah, something like that. But we had one period here where they were super high. That was in 2018 because the stocks actually did come out at that point. So now we zoom in to where we are. And this is still on the month. Switch over to the week, and we're still going to see this parallel channel. Zoom way out here. It doesn't really line up. Sometimes it's like this. Go back to the month. So anyways. So like, now it's at 14.62, so it's actually is 1.46. So that's just divided by 10. Right? 14.62 divided by 10 is 1.462%. Right? On this, it is 1.4. Yeah, it is literally is 1.462. Okay. So just so we're clear on that, this is for some, I don't know why, just for some reason it's that divide by 10, so it's 1.462%. So the, what was it? We were reading on Yahoo or Market Watch or something. Kevin Landis or whatever his name is. He's predicting 2%, and I was actually saying 2.2. And the only reason I was saying 2.2 because I'm eyeballing it. I'm eyeballing it, so. You know. And 2.2, if it did continue up, let's just draw a line here. If it continued up here, and let's make our line yellow, then that would put us right at almost a 2. So yeah, that possibly is right. But I was thinking more along 2.2 up here. But yeah, I mean 2, it seems about right now that we actually do this technical analysis. Although I don't know how useful a technical analysis would be on the 10-year treasury yield, but I mean, to be fair, it's legit trading in a nice parallel channel. Can we short this? I wonder. Once it gets to 2? Huh. Wow, Gush is 9% up. Nice, okay. Things are not looking all that bad. Doesn't look very good, but the worst ARC is ARC G, down 3%. Best thing is really just going to be NASDAQ. That's kind of surprising, and that's probably why my FAS is just going to suck today, even though I bought it. And that's how it goes. Anyways, so yeah, let me just, can I add this into the, yeah, I can follow it. What should I, which category? 10-year treasury yield, yeah, whatever. And the ET. Okay, cool. Well, that's interesting. That's pretty interesting. There's a lawyer on YouTube who's got a great channel, Legal Eagle, and he has a video in which he talks about copyright claims on YouTube. I suggest looking. Okay, I'll do that when I have some free time. Ever find out why we can't buy BES on Webull? I did not find out why. I assumed it was because they needed a few days. Still not available. Well, it's either going to be because it's Canadian. That's kind of weird though. Or if it's too new, Webull doesn't let you. Same problem for CSTA.U. Constellation Acquisition Corp, which is probably good. I didn't buy it. Down a little bit. But I'm still waiting around for those for sure. Oh, Amazon is up 1% today. That's interesting. Well, yeah, that would be funny to echo some of the talking heads. Always a good time. And I'm also thinking about going out around where I am locally and doing some videos, because I actually have an opportunity to go to the Neo store, for example, and then just check it out, you know. Although I'd prefer to find someone that has a Neo that we can like drive around, but I don't know anybody that has one. So I guess I could try to put that out, but my followers are all not in China, so anyways. Anyways, guys, last look at the market seems like the situation has improved a lot. Semis are still not doing very well, so we'll see how it goes. But that speech, Fed speech, should be coming pretty soon here, so just stay strong. I cut my positions, if you weren't watching before, and moved the money into financial sector. Should have moved some into oil, the energy ones too, but might do that tomorrow. If they have a store, just ask them for a test drive. Yeah, I don't think they do. I mean, they have a store, but I don't think they do test drives. That's the thing. Because it's like the yeah, I just don't think I don't think they do test drives. I don't know why I think that. I just feel like they wouldn't do that because it's, yeah, I don't know. I just never really saw anybody doing a test drive. And actually, you know what? I actually did a test drive of a Model X in Shanghai before, but that was at a Tesla store that was really big, and it was like a standalone Tesla store. It's not like in a mall or something. But the Neo and the Li is, they don't have the standalone ones. They just in some malls, and actually Li's not even. But anyways, we'll see though. We'll see. Why would you want to buy a car without test riding it? I mean, I would. I don't really care, to be honest with you. Those are so cheap. I mean, relatively super cheap. Like, I would just order it online. Like, you can just send it to me. Whatever. Because if there's any problem, I can go and take it back. That's a warranty. But that's actually kind of how it is, because a lot of stores now in China, they don't even have shops anymore. And if they do, they just have like one car sitting there and you can look at it. You don't actually drive it. Yeah. Well, we'll see. We'll see. Like, if I was going to like Mercedes-Benz or BMW or something like that, then yeah, we definitely would be able to test drive. But the other places, they don't care. They don't care. Especially, they only have one on the showroom floor. But we'll see. I'll think about it. Gotta go talk to them. Last time I went into the Neo store, they seriously. I had a lot of questions too. They don't care at all. And then I went into a Tesla one. I was scoping out the Neo stock. This was a while ago because I wanted to buy it. And I went into a Tesla store, and it was in the same mall, a Tesla and Neo, right by my place. And I was like, well, okay. So I went to Tesla. I was like, okay, so how much does this cost? China, because they're all different prices, different countries. And then see if they have any special things going on, and any incentives, or what's to do with the battery and stuff like that. And then I went into the Neo one, which was in the same mall, and then that's where I found out that for the first time they're doing the what's it called, like a battery swap. Like, you basically pay, I think it was 900 RMB, which is like $150, $150 per month, and you basically like rent their battery. And so you don't actually have to buy it. So that cuts down the cost of the total cost of getting in this car. So the ES6 actually turned out to be, with the renting of their battery, turned out to be 270,000 RMBs, which, funny enough, that's exactly how much the Model 3 cost. The Tesla Model 3. And so 270,000 is $41,000. Which is that's how much the Model 3 cost at the time. That was a while ago, so they could have changed the prices. I'm not sure, because the Model 3 came out just last year, I think, Shanghai, from the Shanghai factory. But all of the X's and the Y's are not even in, and I haven't ever seen a Y. But the X's and the S's, they're not made in the Shanghai factory, so those are all imported. And anyway, doesn't matter. But yeah, I'll see what's going on. I don't know when I'll have time to do that. But maybe tomorrow. We'll see. Might run over there and try to make a video about it. Could be interesting, huh? Alright. Well, we're ending off on a better note than what we started out on. Well, not really. Kind of tanked at first. But yeah, hey, good call on the gush. Good call on the gush. Alright, guys. Well, anyways, I'll see you guys around, and we'll see about this Neo thing. Could be interesting. I guess a film on my phone. I don't have any camera. I'm seriously just winging all this stuff. Really just kind of focused on the stocks and the research, but all of this other stuff I'm kind of winging. But I'll figure it out though. Anyways, guys, appreciate you tuning in, and go ahead and follow me on Twitter. I'm about to go post all those things, those trades and stuff on Twitter. So I'm about to, if you have the notifications on, might want to turn those off for the next 10 minutes, because I'm about to blow that up. All right, guys. See you